Hi friends, welcome to ABCD of Stock Market Investments. I am Apurva Chakraborty and I am here to share my thoughts about how to start your journey even after retirement. In this session, our subject of discussion is how to select stocks. I will share a step-by-step method for you to follow the process easily. As you know, stocks are available in various industries, namely FMCG, information technology, oil, gas, petroleum, and construction, etc. Decide which type of stock you would like to buy first. Make sure that the list of stocks you pick have a future for at least next 5 years so that you can see a steady growth even after 2 years and not see the stock being pulled out of market. For example, nowadays technology stocks are doing well and do have futuristic growth opportunities. Do your own research first to select at least 50 stocks. Next, you need to study the performance of the selected stocks for a minimum of 1 month and maximum up to 1 year in the graphical representation. Please check the P ratio where P means market price and E means earnings. Keep in mind the stocks which are having a ratio below 15 are cheap and 18 and above are ideal. Although it might vary from industry to industry, but this is the ideal value. As mentioned earlier, try to learn in deep about the industry type like FMCG, construction, chemical, agriculture, infrastructure, power, renewable energy, metal sector, automobile, etc. Check the ROE value, which means return on equity is considered the return on net assets. 15 to 20% ROE is considered to be good enough. Next, check the PB ratio, means the price to book value, where the amount investors are willing to pay for a share in the company's assets. As a thumb rule, any value under 1.0 is considered a good PB ratio. Don't forget to look at the amount of debts for a particular company owes, and if the industry is supposed to have that amount of debt. For example, the banking industry and the construction companies do take loan to build their assets. Do so it's normal for them, but for other industries it's ideal if the company is a debt-free company. If you want to check this, I recommend you to go to Screener in website where you can find the first list of debt-free Indian stocks. Also, have a look at the percentage of promoters which are displayed in the bottom of the sheet. The percentage of promoters more means the stock is secure one. Hence, prior to investing, please check these criteria. You should be extra cautious before investing the and invest in stocks which will build your confidence strong about assured returns. For your immediate information, you may invest in the present scenario in FMCG, textile, infrastructure, renewable energy, and diamond and jewelry stocks. But keep in mind, don't invest your total capital in a single stock. Distribute in numbers of stocks in different sectors. This will result in a financial balance and keep yourself updated about the latest updates. Always take the opportunity to buy at an all-time low price or wait for the lowest price so that a good profit margin could be incurred. After sufficient return on your capital investment, withdraw 50% of your investments. Say you have invested in 100 stocks. Withdraw half of the investment and keep the rest half for further rolling. In this way, you can run with zero capital investment. Although sometimes, as per market conditions, you have to take calculated risk through following the proverb no risk, no gain. Always try to avoid selling of your stocks at a loss if it is not unavoidable. Hence, if you are invested in fundamentally strong stocks, you can stay invested for longer duration given if there is loss it will recover. Finally, if you ask me why should you choose to invest in the stock market, because if you fix money in the bank or any financial institute, you will earn a maximum of up to 10 to 12% interest rate per annum. That too after a stipulated time period, means after maturity. But in case of stock market, it is possible to get 15 to 30% within 2 to 3 months, even depending on the market performance, and follow the basic principle of company of money control. Do not lock your capital invested. Always try to roll as much as possible in line with the scenario and prediction of the bullion market. All the best. In the next segment, I shall explain to you about my experience with a particular stock in the Indian market. Till then, thank you and keep investing.